once again falling quite substantially, with most indexes such as Dow Jones falling 2.48% and Nasdaq falling 2.55% and S&P 500 2.36%. So mostly of these latest volatility generated by, once again, Trump tweeting, challenging the Fed to fire Powell, and then saying that Powell has to be fired or something like this, obviously trying to control Fed, which is never a very good thing. Then once again, the question is Trump really wanted to crash stocks in order to bring interest rates down? But that's not the best way to do it. You don't want Fed to cut rates by forcing them to cut. With Powell already saying last week that most likely won't be cutting rates in May, as they wanted to see more data before doing its first interest rate cut in a few months' time, obviously, because Fed already cut rates a few times last year. So obviously that made Donald Trump uneasy, and as you know, the reaction hasn't been very positive for the market. S&P as ASX200, on the other hand, in Australia, continues to head strongly, with only falling less than 0.25% today, even though US market has fell quite substantially. Looks like we're getting a little bit immune to this whole thing. A lot of members and viewers are now asking me my view on S&P ASX 200, whether the Australian stock market is prone for a V-shaped recovery, or we could see another leg down. I'm going to be answering in this video. Let's have a look. My name is Les, I'm Chief Analyst of BG Trading in Australia. Today is 22nd of April 2025. A lot of volatility in the market, and we're going to be looking at whether S&P ASX 200 or the Australian stock market could have a V-shaped recovery, or it could see another leg down. I'm going to be sharing my opinion how I'll be playing the market, how we have actually been playing the market together with our VP members. Maybe playing is not the best word. How we've been trading, that's the best word, that's a better word, right? How we've been trading the market together with our members to obviously chase 20 to 40% profit within 1 to 3 months. And we have been doing very good trades during this whole mess. Right, but we still gotta be very careful. That's what I'm going to say. Very, very careful in this market. So if you like the videos, please subscribe the channel right now. Don't just watch. And also, hit the like button. I'd like to invite you to become a member of our free Facebook community. We call that buy, grow, sell strategy for share traders right there. And yes, we have a chat group, free chat group in this community. So make sure you become part of this free chat group. A lot of fantastic conversation right there. Now, let's focus into S&P ASX 200. But to take some conclusion, I always like to see some organic indications. What are the best organic indicators to see whether things are heading to the right direction, or we really should keep a red flag up? Commodities. I like looking to what energy is doing and what gold is doing. And at the moment, as you can see right there, gold still heading to the all-time high levels. Continues to move up, which is never a good indication, right? So it means that inflation could still doesn't mean actually we can see through facts with Fed's comments last week, the inflation is still higher than they wanted. So that's why Fed is going to be holding rates in May so far. So hopefully they stick with their words, right? But most importantly, let's take a look at oil prices, because this is a key indicator of macroeconomic economic growth across the world. And we had this sort of a small recovery there, but as you can see, this long-term this long-term support level has been broken, and in my opinion, I don't think we will see a recovery. We might reach sort of $65, but could still hanging between 60 to 65, which means we could see something like this on the stocks, right? So this answers the question of this video. This is what I think the most probable scenario. S&P ASX200 will test. Okay, so remember last video, I said that I had target for the S&P ASX200 to go up around 10%, reach the SMA 40, which is the short-term moving average, and then test the lower levels again. That's what I think is going to happen. And that's what I'm positioned for, right? Would I short the market because I think going to be a crash? Not. The reason I'm not going to be shorting the market simply because this is not the best time to short the market, because it could well be a V-shaped recovery, and you want to mitigate the risk as much as you can. So you only short the market when the market is trading at all times high, well above the long-term moving average, which is this pink line level there. You can see this pink line, long-term moving average represented as pink. Yes, so we sort of trading below there. So we don't want to short there. We want to go long when we're trading below. But within this macro range there, since I believe we might test this hypothetical support level again, which is pretty much 7,300 on S&P ASX 200. So I would go long right there when the market tests once again, because we will be trading a technically discounted price for the short term as well, right? That's what I think is going to happen. I think the market's done with Trump's tariff now, right? What we're going to be watching very closely is economic data, unemployment rates, and inflation. That's what we wanted to be looking at closely. And the market is pricing, the commodity market is pricing for weaker economic data, therefore bring stocks down once again. So you can see through commodities, which is one of my favorite organic indicators. Then obviously you got to see what the data comes out in the next few weeks, and then make a judgment. That's what the market is going to be looking again. I think the world is done with tariffs. Going to see now what is the impact of the tariffs in the market, and then obviously I will stay with my long positions until all the stocks that we are trading now reaches the targets. Okay, and then we're just gonna be cutting, like, locking profits as we've been doing. And buying again if the market tests this hypothetical support level. I have an online course called How to Recover from Losses. It's on our website, bgtrading.com.au. It's only $80, right? But in that course, I teach you how to only trade the index, the S&P ASX 200. Right? And that is a really good time to look into that course, because we are in a very high volatility levels. And you see, when the market's bullish like this, all you need to do is just buy and hold. Now, because we are into these high volatility levels, and once again, answering the video's question, whether I think the market's going to go up or down. So I think we're going to be moving sideways, testing again this hypothetical support level, right? And it's not a better time to look into our online trading course to learn how to trade the index effectively. This is the time. High volatility, right? And you want to pick single stocks, very dangerous. You got to be careful with single stocks, right? So that's why if you trade the index or some ETFs that leverage the index, not going to margin loan accounts, but trade the ETF itself, hold the ETFs, because we're not going to lose everything with ETFs. We're going to go down substantially if we are wrong, but we're going to go up eventually back, and you recover, not only recover the money, but you will eventually profit out of that. All you need to do wait a little bit. But if you're going to use a margin loan account to leverage, then that's when people loses everything. And I strongly recommend not to go to margin loan accounts unless you're really pro in trading. You're professional, then you do it. Like we do a little bit, but even though we only sticks with high quality, large cap stocks, right? So once again, answering this video, my view is we most likely will test this SMA 40, which was our original target for this recovery, the last video, 10% recovery, almost there. And then we might test one of those two supports levels again, right? And then by testing this, then that's when I would go long again in full position, right? Obviously watching very closely economic data, because it could change. We could receive a very weak economic data with high levels of unemployment now, which we didn't use that data for this particular analysis, and then our target could be well below that. We could see something like this going even under 7,000. But by now, with no further negative economic data, I would say this is the target, and we could see now between now and May. Remembering now is a reporting season starting in next couple of weeks, so you just gotta be careful with that volatility as well, not only for this Trump mania, but also because we're having a report season. Positioning into companies that are highly de-risked from Trump's tariff is the way to go right now. And we have a list of companies that we have been trading together with our VP members right now as we speak. Okay, so make sure you stick with stocks that are highly de-risked from tariffs, at least for now. This is my view on S&P ASX200. Leave your opinion right there, whether you think it's going to be V-shaped recovery, sideways, or further down on the Australian index. Thank you for watching. I'll see you next video. Bye.